Hello everyone, it is Sterling here from Day Trading Forex Live. We are back for the March 2016 month-end review. This is going to be the 10th review in the month-end review series that we started back in May of 2015. For those of you that this is your first review, I basically go through every single valid trade that we had during the month and a total of what we had at that month. This is based on strictly the euro dollar and the pound dollar, although strategy can be applied in other markets and any other pair you want to trade. We really focus the education on the euro dollar and the pound dollar, especially for those that are learning. And I personally focus mainly on the euro dollar and the pound dollar as a preference. Starting in May, that running track record, just to give a spoiler for the month of March, we ended up with a 6% month in the month of March. So over the last 10 months, we've had a total compounded gain of 231%. Now that's again a compounded gain. So these videos hopefully illustrate the power of consistency. I'm a firm believer in consistency because consistency is the way to successful trading. The traders that try to have the blockbuster days, the blockbuster weeks, the blockbuster months, while they may have what they're looking for, they always tend to end up having the exact opposite, the devastating weeks, the devastating months, and that's what wipes them out. So it's much more about what you don't lose than it is about what you gain, because as long as you're having consistent gains, that is by far the key to what creates a successful trader. So anyways, let's go ahead and work through these trades. March was by far the lowest number of trades that we've had in any month I can remember for years. During the month of March on the euro dollar and the pound dollar, although those that trade more pairs had probably many more trades, just the euro dollar and the pound dollar only produced 8 trades, which is about a third of the average of 2015, literally a third. So like anything else, everything comes and goes in cycles. There's been months where we have closer to 30 trades, and then we average somewhere around the 18, 19 pip mark. So again, for those of you that are new, it's important to understand that these trades come from pre-selected points. So the majority of the time, we do have some trades that you'll see from newly created levels, as you'll see for this month. The newly created levels, I think, represent maybe, if you take out the newly selected levels, it did not make much of a difference. I'll give you a total at the end of the month. Basically, the reason I point that out is because it's not like the newly created levels are randomly giving us some extremely profitable section of our trading, because that's something that could be selected after the fact. The fact is the entry itself is still mechanical, and so it's either a valid entry or it's not. There's no way to make it look like an entry if it's not. Again, it either is an entry or it's not. And the same is true for new level creation. It either is a new level or it's not. There is some discretion involved, but there is more mechanical aspects to it than there is discretion for that level creation. So anyways, let's go ahead and work through our first trades. First trade, we'll bring over the daily market preview. These videos are done hours in advance of the market. They're done about midnight Eastern, so a couple hours before trading begins. And the first trade that we had was a long trade. This was off of the level 1 spot 39.22, which was our first lower level. So just to keep in mind this point here, 1 spot 40.38, because that's where our second trade will come from. So we had 2 trades. One was from this lower level over here. One was from our first upper point here. So keep those points in mind. The first lower level trade was here. Very straightforward trade, 1 spot 39.22. We come into it. We create a confirmation back up, provides the pullback for the entry, runs off, hits a full 4% take profit. And every trade is going to be a 2% risk, 4% take profit. This trade runs off, hits a full 4% take profit. And this is a very nice trap move. This is one of my favorite type of stop runs. This candle right here was the 4:30 a.m. Eastern candle. That's when a lot of the UK data is released. So the market creates the spike on negative UK data. It spikes through the lows, looking, everything about that looks bearish. They create the stop run on that level, confirm back up. Imagine how many traders got trapped as they started to short back into this market, as it started to retrace back up, thinking, okay, well, we're going to see lower prices. one heck of a trap to the upside, accelerates aggressively, stops anybody out, and it was a nice reversal trade. I love stop runs that are initiated by news, and that was one of them. We continue into our upper level, the second one I pointed out, which was 40.38. We come into 40.38, we produce a stop run here, 3 candles later to be specific, we create the confirmation back down, and on the same candle the entry occurred, the stop out occurred on that same candle. That takes us from up 4% on the month to only up 2% on the month, because that was a 2% loss, as every trade has an initial 2% risk. That's how we keep track of performance, I should say. Some people are going to risk less, some people are going to risk more. We just keep track of performance based on 2% risk per trade. As we look at the next trade goes from the 2nd over to the 8th. So we had a gap in between trades. This was on the euro, over on the 8th. So we skip over the weekend over to the 8th, and our level that we had was a backside trade from 1035. Now this was not a pre-selected level. This was a newly created level. So for those that think I cherry pick levels, I can assure you I wouldn't cherry pick a loss, but this satisfied the criteria of a mechanical level. So while this was not a pre-selected point, it did satisfy the rules, the mechanical rules that we use for a new level creation. That's why I deem this as a valid setup. It created a valid stop run, valid confirmation. Again, the entry is not a matter of discretion. It's a mechanical entry. That's why it's such an important point to remember. It's why it's such a useful technique for those that are learning to trade, because it takes out that discretion for the entry aspect of it. Although you can't rule out every aspect of discretion with the strategy, it is ruled out with the entry aspect. In this case, provides the confirmation. Entry a couple candles later, we pull back through. Full 2% loss takes us back to break even for the month. This was one of the biggest gaps in time between trades that we've had in a while. It goes from the 8th to the 14th. Next trade was on the pound. This was another backside trade. Again, this is a pound dollar on the 14th of March. This is another backside trade from the level of 43.43. So the exact same trade that we were looking at just a minute ago that produced that 2% loss on the euro. This is a very similar trade. It's just it was a short trade here instead of a long setup. So we come into the backside of that level here. We create the stop run. We confirm down, and then we provide the pullback for the entry. This runs off, hits a hits a 3% take profit, and that takes us from break even on the month up to 3% profit for the month. Let's go ahead and continue forward. We'll continue forward over to the 18th on the pound. And the 18th on the pound, we had a couple trades. We had a couple trades here. One was on the pound, and then the next one was on the euro. The pound trade was from our level here, our level which was another level that was not a pre-selected point. The reason that this level was not a pre-selected level was because of the fact that when we did the preview, again, just to show this, our only upper level that we had was 1.4565, but when I'm talking about what levels we're selecting for the day, again, 1.4565 was the point that we had selected. One of the things that I always address is what levels could potentially form, and that's what we walk through in that preview. And there's again a video that walks through that and is saved in the members area. And so I'm not necessarily talking about that video specifically, but in all videos, I should say, where we have a level that is close to forming or could potentially form, we're always going to address that point. That way you have the guidance as to what we need to see occur in order for it to be a valid level, as we do have mechanical rules for new level creation. That satisfies the rules for being a new level. We come into that level, we create a single candle, stop running confirmation down. That produces a 2% loss when it spikes up here, taking us from up 3% on the month to only up 1% on the month. At the time of the stop out, we'll look at the euro on the same day of the 18th. And at the same time here on the euro, we did have a trade from a pre-selected point. So the level that we had was 1.1297 right there. This was a pre-selected point at 12.97. Provides a confirmation down here, and then 2 candles later, Our rule is if we're already in a short in that same direction. Remember, we were a short pound at the time. Therefore, if we're in the trade in the same direction, we do not exit the first trade until the trade is either stopped out or we get an opposing setup. So on this candle here, this would be the 1845 candle. If we look back at the pound, this is the candle that stopped us out. And so on the euro, when this candle is pulling back, it stopped the pound out for a 2% loss, but it also provided the pullback for the entry, and the entry could have been taken on the euro, was taken on the euro based on the mechanical rule set there, and that was a 2% profit. So a 2% loss in the pound, 2% profit on the euro. That resulted in a break-even day, left us at 3%, same as we started the day at. Next trade was on the euro again. We skip over the weekend. We go over to the 24th. This was again this was not a pre-selected level. We had probably a 50-50 mix. At this point, keep in mind that on our pre-selected levels, we've had 3 trades from pre-selected levels. One was a 2% loss. One was a 2% take profit, or a 3% take profit. And the next one was a 2% loss. So at this point, we're still technically 1% down on pre-selected levels, or on newly created levels during the day. This one right here from 1153, we broke the original level, created a new level at 1153, and then provided a stop run and confirmation back up right at the beginning of the New York session. This resulted in a 2% profit on the day, bringing us up to a total of 5% in the month. And for newly created levels that weren't determined at the beginning of the day, we're actually only up about 1% on those newly created levels. We continue to the final trade. We skip over the weekend to the 29th. And this one here was a euro short. This was a euro short on the 29th from the level of 1216. 1216 being a pre-selected level. Again, 29th, upper level, one spot 1216. We come into 1216, we provide a valid stop run here, confirmation down. This is what we term as a single candle stop run and confirmation. It satisfies the rules of a stop run and a confirming candle in one. And then it provides the pullback for the entry, and we close out just ahead of the news. So this was news that we had coming out. Janet Yellen speaking at that time. Based on our mechanical rule set, we do not carry into news that has the capability of spiking the market more than 15 pips. That results in a 1% take profit, taking us to a total, and our grand total of the month, which is 6% on the month. If you were a member, that is, maybe you're a new member, you don't do new level creation. In other words, you don't trade from levels that are new. In other words, you only use levels that are pre-selected in the daily market preview. Remember, the difference between our newly created levels and our only trades from pre-existing points, the difference would have only been 1%. So instead of being up 6% in the month, you would have only been up 5% on the month. And the reason I point this out is because I get questions from non-members. I think members, they realize this because they know the rules of the strategy. They know that I can't just cherry pick a level and say that that was a level or that wasn't a level. It's very rigid rule set around it, and so it's very easy to understand whether it is or it isn't once you understand the strategy. I don't want to say easy, but you know whether it satisfies the rules or whether it doesn't. So I get this question a lot from non-members that tend to think I might skew things to one side or the other, but what you'll find in the daily market or in these month-end reviews is that I show you what ones are selected, which ones were not. So you can go back through, and what you'll find is that the difference between whether you just use only the levels that are pre-selected and whether you use that plus valid newly created levels, the difference is really very minimal. It's very minimal over the course of time, and the overall effect is not massively skewed to the downside because the majority of our trades will come from, again, more often than not, the majority of our trades come from pre-selected points, not newly created levels during the day. So it'll be less trades, and therefore it results in not a huge difference to one side or the other. And some months it's been skewed to the downside. It's actually produced less profit because of those newly created levels, just happened to be the way it worked out. So I point all this out so that there's as much transparency as there possibly can be. Remember, there's thousands of members that watch, or thousands of members of DTFL. How many watch this video? I don't know. Hundreds, at least 5, 6, 7, 800 will probably watch this video of the members. Any one of them can go back and cross-check all of these trades versus the daily market preview. You have exactly what I've said. It was all said in advance of the market. And then you can apply the rules of the strategy to see whether these are truly correct trades. And so that transparency is really important to me, because transparency and the ability to know whether a strategy is profitable or not is important for you, the listener, who's trying to learn how to trade, because if you don't trust the strategy, then it's very difficult for you to invest the time needed to actually learn how to trade something. So anyways, I'd encourage members to go back through the preview, as I always do. Encourage you to go back through the daily market previews on your own, cross-check all these trades, cross-check everything, and feel free to email me with anything that you have a question about. I'll be happy to field that for you. As I've been pointing out in these month-end reviews lately, I will point this out again. We have a trading software called DTFL Pro, which is designed to trade the entry itself. So you guys know we trade from predetermined levels, and then we wait for the confirmation entry to either set up at that level or not set up at that level. So what we have is a program called DTFL Pro. I'll bring that up here real quick. So as you can see, and this kind of, actually I'll get rid of the boxes on my chart, and that way it clears this up for everybody. So anyways, you can see here, this is DTFL Pro, and what it does is it will trade the confirmation entry from a pre-selected point. So every day you go in, let's say that we had an upper point at this line right here. Let's say we had an upper level at one spot 1350. We don't, but let's just say it was there for illustration purposes. I would come over here to where it says PP lines, and what you would do is first I'll unselect everything else. Let's say I only had one upper and one lower point. Okay, so I only have one upper and one lower point. I'll clear all this out because you can have a total of 5 upper and 5 lower. So let's say we had one upper and we had one lower point. This upper level here, let's say it's at 1050. You can either write it in or you can drag it up. So let's just drag it up there to 1050. I'll get rid of this level. So we'll drag it up there to roughly 1050, that area. It's probably not right on. Okay, it's at 1350 and 5/10, so I can delete that 5/10. I'll drop down a little bit. And then let's say this level is at 1285, the lower level. Okay, so right now we have a upper listed level at 1350, and we have a lower level at 1285. So if I click Save, and then click New Operation, you'll see those levels will pop in. Now what will happen is that when the price hits that level, it will apply the rules of the entry. It will, if it produces a valid confirmation entry at the lower level or at the upper level, it will take the entry based on the rules of the confirmation entry, the mechanical rules of the confirmation entry, and it will manage the trade according to how we manage the trade, according to how we manage the trade manually. As I always say, and as I'm a firm believer in, there is always going to be some difference between something that is automated or semi-automated, as this is, and a mechanical application. You cannot perfectly replicate a manual application of the rule set, in my opinion. You just can't. This does it extremely close to a manual application, and overall, if you're talking about the same levels, we'll have a very small difference in between results between what a manual application would be and what this application would be once it is set up. Everything can be adjusted. All the safeties are built in. You can have timed exits. You can exit based on when news is coming out. You can reactivate trading after news. Stop losses, take profit, everything is involved with that is set up. Deactivation criteria, what it takes to deactivate a level, everything that is involved in the mechanical application of trading is done through DTFL Pro. It's an awesome piece of software. It is not sold to non-members. For those of you that are thinking about becoming members of DTFL, what I would encourage you to do if you want to use DTFL Pro is I would encourage you have to really learn the strategy regardless of what you want to do. Even if you want to use DTFL Pro for all of your trading, you still really need to at least understand the basics of the strategy, because you have to you just have to understand the basics of the strategy. I'm not going to get into a full in-depth explanation there, but it's critical to understand that. That way you can properly use DTFL Pro. And then you also have to always, every day, you have to input the levels each and every day. So each and every day you'll have to put those points in. You can draw your levels in each and every day. What you do is this right here. So every day I input the levels right here. So what members do is they take the exact points I put in, they plug those numbers into the upper and lower points here, as you can see. They plug those points in, and then they allow DTFL Pro to trade that for them. I'm a firm believer that there's no such thing as a magic easy fix in trading, but DTFL Pro does a very good job of trading the strategy for when you cannot be there. And I would encourage people to look at it. If you are a member, you haven't looked at it, I encourage you to take a look at it. If you are a non-member, you want to use DTFL Pro, it is not sold to non-members. And the reason being is it takes an understanding of the strategy to use DTFL Pro properly. So anyways, that is that. I hope you enjoyed the month-end review. I hope you enjoyed the little overview of DTFL Pro. I'd like to share that with you. That way there's a little more insight for those that are wondering if the strategy can be traded. If you're not there, sitting there at all times, definitely can. And that is one way it can be done. So if you have any questions, feel free to email us at support@daytradingforexlive.com or daytradingforexlive@gmail.com. I'd be happy to reply to any questions that you have about the strategy. If you're looking to see whether the strategy is for you or not, whether the education is for you or not, feel free to shoot us an email. I'll be happy to get back with you and talk it over with you. That will do it for this month in review. Until next time, happy trading.